Schwab Intelligent Portfolios Robo-advisor for investing. Full review, features, strengths, weaknesses. Links to the platform are in the description. Schwab Intelligent Portfolios is a fully automated robo-advisor designed for hands-off investors looking for diversified, low-cost portfolio management. Developed by Charles Schwab, this service builds and rebalances portfolios using a mix of ETFs across 20 asset classes, including stocks, bonds, real estate, and commodities. A key feature is its zero advisory fees. You only pay the ETF expense ratios, making it cost-effective compared to competitors. However, there's a $5,000 minimum investment, which may not suit beginners with limited funds. This platform is ideal for long-term investors seeking a passive strategy with tax-efficient investing. It includes automatic tax loss harvesting for accounts over $50,000, helping to offset capital gains. Additionally, smart beta strategies are available for those looking to enhance returns beyond traditional indexing. Unlike many robo-advisors, Schwab also provides access to human advisors, but only through its premium service, which requires a $25,000 minimum and a $300 one-time fee, plus $30 per month. A major strength is its goal-based planning tools, allowing users to set investment targets, retirement goals, or wealth-building strategies. Schwab Intelligent Portfolios also integrates with Schwab Bank, offering cash allocations within portfolios which Schwab uses to generate revenue, a point of criticism, as these cash allocations may be higher than optimal for returns. On the downside, some investors may find the cash allocation too conservative, reducing potential long-term growth. Unlike competitors like Betterment or Wealthfront, Schwab lacks direct indexing, which can limit tax optimization for high-net-worth investors. Additionally, there are no fractional shares, meaning cash from dividends or contributions may sit idle longer than with other robo-advisors. Overall, Schwab Intelligent Portfolios is a solid choice for cost-conscious, long-term investors who want automated, diversified investing with tax benefits. However, those seeking more aggressive growth, direct indexing, or lower minimums might find better alternatives. If this review helped, check out the links in the description for more details.